Good morning everybody, it's Chris here from Serene Education with the 4 majors notes update for the 22nd of May 2012. Hi guys, it's going to be around with 4 majors, starting with the Euro against US dollar on our daily charts, and you can see that we have a slight consolidation over the Asian session, and that's primarily as we head into this 23.6 retracement area. If you take the high to the low, you can see price is now trading at that 23.6 retracement. And if you see price actually closing above that today, then we could see potentially for 38.2 being our next target here at 12.90. So overall bounce at 12.65, which happened to coincide with the previous bounce we saw back in early January of this year. Psychologically, anybody who was actually trading this would have looked at this as a long-term target and taken their profit, and sure enough we've had this bounce. How much it bounces now depends favorably on how much negativity people still seem to think there is with Euro. Greece still an issue out there. Yes, they've been sitting down G8, etc., trying to work out a deal, but still there's still major problems in Greece, and there's also problems in Spain, Italy, etc., etc., etc. So it depends how much. If we do see price trading closing higher than 23.6, then ultimately, or price-wise, sentiment is probably going to be looking at 38.2. The likelihood of the other scenario would be if we don't see price trading above the 23.6 or closing below the 23.6 for retracement, then we could see this is primarily a small pullback, and we'll see a retest of 12.65 quite soon. Either or, we do need to see a confirmation signal. Bearish engulfing here, we could potentially see the downside still in favor. Nice little bullish move, hammer here, or a little some sort of confirmation break and close higher than 23.6. Then we could see price moving towards the 38.2 here at the 20-period moving average. Moving on to sterling, let's have a look at this pair. Same as its euro counterpart, slight pullback. However, very indecisive yesterday close. Upside favorite, but more very much in terms of a spinning top. Almost a doji. Price trading slightly higher than the 200-period moving average, which is still a sign of positiveness. However, not a very convincing close. What we would like to see is a definite more of a bullish move, a less candle wick and more candle such. As you can see, price has really pulled back below that 1600 mark, which happened to be prior long-term support and resistance. More of a psychological target area, and broken through with a lot of momentum to the downside. So CCC very much in our favor to looking for further negativity in the market, as we are closely tied with Euro, and the upside trend has been breached. So everything looking negative at the moment. All the moving averages above price bar the institution moving average. It's playing with the institution moving average. Overall, if we're trading above the institution, the 200-period moving average, then overall price is still looking positive. And trading below it, then it's obviously negative. So as you can quite clearly see here, we've had this major pullback, and now we have this slight upside move, this bounce, and you'll probably more likely see this pair also tackling the 23.6 fib area here at the 1587 mark quite soon. Ideally, we'd like to see it trading above that to see that is a major pullback. However, this move just recently quite strong, so the momentum was very, very strong. Depends to see how much if this genuine selling here was really, really strong enough to actually try and pull price up. Failure to do so, a break above 23.6 would definitely confirm that we should stop looking for favored for reattempts of this area here, just below the 15,700 soon. So price not really tackling those highs. If I take the all-time low here to the previous high recently into the fib retracement, you can see the 23.6 hesitation, 38.2, and price bouncing nicely here on the 50%. So if we can stay above 50, then we could see price potentially moving up towards the 38.2. Got to get above 15,900 in order to see genuine further upside movement towards the 23.6. Failure to do so, could see price ranging along this line here, playing tic-tac with the institution moving average. So we'd like to see a genuine confirmation signal, and as long as price remains below this, then obviously we're still looking for shorting opportunity. Onto the Swiss franc, good old Swissy. Let's have a look and see what she's been doing. Okay, all-time low to the high. We had at the top here 9.6, and you take the 9.6 all the way to just the current low, or previous low just recently. You can see a lot of areas where price has actually been moving in these fib retracement areas. And so-called 61.8 over here just breached it recently, which happened to be up top. Very strong support and resistance level here at the 93 93.5 mark, broken up, and we've had a pullback. Price is still trading above this 93.5, and as long as it maintains this, then we should be looking for topside favor and just a consolidation after this massive move to the upside. People taking profit, and that profit taking is taking us back towards the 61.8, which happens to be here at 935. If price can remain above this 935, then overall we could see a real attempt of these highs here towards the 960 quite soon. All the moving averages are in play and all below price, acting as support, and most importantly our CTC strategy has given us the all system go for further buying sentiment. So you shouldn't be looking for shorting opportunities if and when, or until such time as the 935 has been breached. If 935 has been breached, then we should be looking for opportunities to potentially short towards the 50%, the 38.2, and the 23, which will take us back to the institution moving average. So for the time being, you can see that yesterday's candle, more selling involved in this candle wick. A lot of wick trading yesterday, but more selling sentiment in this candle. If this momentum can stay or keep its head above the 935, then we could see a consolidation here before we see we'll look for a nice bullish engulfing or a hammer of some sort to see a reattempt of the highs here at 945.70, 947, 948 area before we see a retake of 960. If we get a bearish engulf and it closes below 935, then we should be looking for nothing more than intraday shorts towards the 50%, the 38, and the 23.6 respectively. Last pair of the day is US dollar Japanese yen. Let's have a look and see how far this one's been going. So here, the all-time low here in February of this year, we had this massive hike up towards the 8,400 mark, where price fell at a psychological, very strong support and resistance level on a monthly basis, and we saw price failing to break and close higher. We saw a lot of indecision candles going into this top, and sure enough we saw some bearishness, and then price pulled back towards its 23.6%, hung around here for a week or so before we saw bearish engulfing, and we saw the 38.2 being tackled. Here again, suck around 38 on the underside. We thought negativity towards 50 was happening. We saw a bullish engulfing candle which took us back up again, but that sentiment really hanging on to negativity, and price was forced to the downside. In doing so, forming lower swings, which depicts downside trend. The CTC starting to give a hand to the bearish side of things. We saw the red arrow, red candles. Eventually we saw the CTC on the other side getting red, and the moving average crossovers. So everything looking favorable for downside movement, and sure enough we targeted these Fib retracement areas. Recently, on Friday, we saw price heading into the 61.8, and on Friday hesitating at the 61.8. Monday's closing slightly higher, forming a bit of a support here at 7,900, and we've had a psychological, just a slight bounce to the upside. Now, as long as 61.8 acts as support, then there might be an opportunity for price to bounce back up towards this previous hesitation area here at 80. If not, then we could see price. We want to see price of this to still remain bearish. We want to see the 61.8 here at 7,900 being breached, and in doing so, we should be tackling the 78.50, which happens to be the institutional moving average. Get below that, then we're heading into 80, which happens to be a very strong support and resistance level in the past. I'll just make it nice and thick so you guys can see it. There we go, and a very strong one just recently was the 80. Very strong support and resistance level recently. This is where the candle really broke out of its shell, really moved to the upside with a lot of momentum. If I just pan out, you'll see, going back to October, November, December of last year, you can see hesitation. So a lot of hesitation at 84, a lot of hesitation at 80, and once again a lot of hesitation here at 78 going through November, December, October, November, December of last year in particular. So now you can see we've clearly broken below the 80, and that sentiment is looking favorable downside. This downside trend here, you'd expect if price goes sideways here at the 79 or 61.8, then we should see some sort of consolidation or pressure to the downside back again on this trend line direction as the 20-period moving average heads south. So as it stands now, if looking for further downside movement, we've got to see a break below 61.8 to give us that sentiment that price is generally still looking favorable shorts. If not, we see a bounce here and price still heads higher, we could be targeting the 80 again quite soon. Okay guys, that's it for me for today. Hope you have a fantastic trading day. Please ensure that you follow the rules of the strategy. All our students out there that are trading the CTC strategy, please follow the rules of it. It's one of the best templates to show all you newbies out there It's great. It is lagging, but it does what it says on the tin. It keeps you in trades a lot longer, more profitable, and that's exactly what we want to do as traders. Back that up with sound money management rules, and you have a genuine winning trading system. Other than that, have a fantastic day. Enjoy the weather, and I'll see you first thing tomorrow morning. Until then, trade serenely.